So we're going to look at Next. They've got half-year results out on Tuesday. What should investors be looking out for?
Yeah, interesting. Next has sort of bucked the retail sector gloom this year. They were sort of £62 highs in the middle of the year. It's pulled back slightly since then to £53, but that's still like 16% up since the start of the year. Its third quarter figures in August were pretty decent. I think total sales were up 2.8%. That was far higher than the 1% full-year guidance spoken about in May. I think that also left half-year sales up 4.5%. Though Next sort of undermined that by stating that the heat wave has likely pulled sales forwards from August into June and July, meaning that the fourth quarter might not be as strong as first hoped. In terms of what to expect from Tuesday's half-year results, I think any kind of updated guidance on the fourth quarter and the full year sort of sales figures following August Next will now know whether or not that was true, that the sales had been pulled forwards from August. Then, the weather was still warm in August, so there isn't any real reason why customers shouldn't have been buying more summer clothes during that month. I think also investors were going to be looking for an improvement on last year's half-year pre-tax profit figures. Then I think they fell 9%. So any beat on that, I think the half-year pre-tax profit figure then was like £309 million. So any beat on that, I think, will be welcomed. Like I said, there's sort of like a £10 gap between where it is now and the highs it saw earlier in the year that Next could fill if investors react to the half-year figures on Tuesday positively. So that's what our clients are doing. They're buying around the £53 mark. They sort of have been since it fell towards those levels over the summer. I think they're looking for sort of similarly decent sales figures on Tuesday that should help it lift it back towards £54 and above, really, I think.
Okay, great stuff. Thank you.